Hey everyone, welcome back to Corporate Decoder, the place where we uncover the hidden stories within company filings and get a little too excited about spreadsheets. Today we're looking at Quantum Sci Incorporated, and wow, they've been busy. This filing is all about a new agreement they've inked to potentially raise a whole lot of cash. Stick around because we're going to break down what this means for the company and for you. As always, if you enjoy digging into these documents with us and want more of this kind of breakdown, make sure you are subscribed and definitely join our Discord community. The link is in the description below. It's a great place to chat about these filings and get more insights. Alright, let's jump right in. This here is a Form 8K filing, which is basically a company's way of telling the public about important stuff that has happened. For Quantum SI, the big news is all about a new deal they've made to potentially sell shares of their stock. So on the 26th of September of 2025, Quantum Sci Incorporated, which we'll just call the company from here on out, signed a sales agreement with a company called Leerink Partners, LLC. Think of Leerink Partners as the company that helps sell stocks. Under this agreement, the company has the option to sell up to a massive $100 million worth of its class of common stock. Now, this is important. They don't have to sell any of it. They can choose to sell all of it, some of it, or absolutely none of it. It's completely up to them and when they decide to do it. But here's a key piece of the puzzle. This whole stock selling plan hinges on something called a shelf registration statement. Imagine the company has a shelf where they can put stock that they are ready to sell. This filing is essentially saying they've put that stock on the shelf and are waiting for the green light from the Securities and Exchange Commission, or the SEC. They've filed this form S-3. And the success of selling shares is dependent on this registration statement becoming effective. The company is being upfront and saying they can't guarantee that it will become effective or that it will stay effective if it does. So how will this selling actually work? Leerink Partners will act as the sales agent. They'll use their best efforts to sell the company's shares on the stock market. The company gets to tell Leerink Partners things like the price they want to sell at, when to sell, and how much to sell. It's a pretty flexible arrangement for the company. These sales are expected to happen through what's called an at-the-market offering. This is a way for companies to sell stock directly into the open market, often when the stock price is doing well. It's a common strategy for companies that want to raise capital without the big fanfare and delays of a traditional secondary offering. Now, Leerink Partners isn't doing this for free. The company has agreed to pay them a commission for any shares they sell. This commission can be up to 3% of the total money raised from those sales. On top of that, the company will also cover some of Leerink Partners' legal expenses, capping it at $75,000 for the initial agreement and some ongoing costs. Both sides can also end the agreement at any time by giving proper written notice. The shares being offered are the company's class of common stock, which trades under the ticker symbol QSI on the Nasdaq stock market. The other security listed is their redeemable warrants, trading as QSIAW. This deal is specifically about offering and selling the class of common stock. This whole move to potentially raise up to $100 million is a pretty significant one for Quantum Sci Incorporated. This is a company focused on developing groundbreaking diagnostic tools using silicon quantum dot technology. Their core idea is to revolutionize early disease detection. They have class of common stock and also redeemable warrants, each exercisable for one share of class of common stock. The actual sales agreement document itself is referred to as Exhibit 1.1 in this filing. The company has also included legal opinions from their lawyers, DLA Piper LLP, as part of this filing confirming the legality of these shares. The report is signed by Jeffrey Keys, the Chief Financial Officer of Quantum Sci Incorporated, dated the 29th of September 2025. Now let's look at what this all means. Quantum Sci is positioning itself to raise a substantial amount of capital. Why would they do this? Well, companies in the biotech and diagnostics space often need significant funding to push through research and development, clinical trials, manufacturing scale, up, and market penetration. This agreement gives them the flexibility to access these funds if they feel the market conditions are right and they need the cash to fuel their growth or strategic initiatives. One key thing to remember is that this is an at-the-market offering. This type of offering is less dilutive and disruptive than a traditional secondary offering because the shares are sold gradually over time, often at prevailing market prices. This suggests that the company might be looking for a steady stream of capital rather than a single large infusion. Are there risks? Absolutely. First, the effectiveness of the registration statement is a big unknown. If it doesn't get approved or is revoked, this whole plan goes out the window. Second, the company is not obligated to sell any shares. They might decide not to proceed if market conditions aren't favorable, or if their financing needs change. This means that while the potential is there for $100 million, it's not guaranteed. Third, even if they do sell shares, it could lead to dilution for existing shareholders if they issue a lot of new stock. Dilution means that each existing share will represent a smaller percentage of ownership in the company. However, companies often do this to fund growth that they believe will ultimately increase the value of those remaining shares. From a strategic standpoint, this move indicates that Quantum, Psi is likely focused on accelerating its development and commercialization efforts. This could involve investing more in R&D, expanding their sales and marketing teams, or even making strategic acquisitions. The fact that they are lining up this facility months in advance suggests a clear foresight into their future capital requirements. Looking at the broader picture, Quantum, Psi is operating in a highly competitive field. Companies that can deliver on early disease detection have the potential to disrupt healthcare significantly. However, the path is arduous, with substantial regulatory hurdles and scientific challenges. The ability to tap into capital markets efficiently, as this agreement signifies, is a critical enabler for such endeavors. So, in conclusion, Quantum C has put in place a mechanism to potentially raise a very significant amount of money. This gives them a powerful tool to fund their ambitious goals in the diagnostic space. The success of this initiative will depend on regulatory approval, market conditions, and the company's strategic execution. It's a strong vote of confidence in their long-term vision, but as with any financial maneuver, it comes with its own set of risks and considerations for investors. Alright, that's our breakdown of QuantumSys' latest filing. What do you think about this new agreement? Does it signal strong growth ahead or potential dilution concerns? Drop your thoughts in the comments below. If you found this analysis valuable, hitting that like button really helps us, and subscribe for more deep dives into the corporate world. And once again, don't forget to check out our Discord community linked in the description. Thanks for watching, and we'll see you in the next one.